So Jen, what's the latest rates today? I mean, I hear they're crazy and people don't want to buy anymore because they're waiting for them to go back to 3%. And the feds are saying they're going to bring them down, but now they're saying they're not going to bring them down. What's the story here with interest rates?
Yeah, at the beginning of the year, Fed said that they would drop them at least 6 times and then 4 times, and now they're saying 1 time this year. Interest rates currently are in the high 6s, maybe low 7s, depending on your credit score or program that you're using. But interest rates, we might see another drop. I would say maybe low 6s to the mid 6 range, which is a great time to buy with that kind of an interest rate. Yeah, they were up into the high 7s and 8s. So if we can get them down into the 6s, I say buy, buy, buy.
So what are they looking at ratios right now of your debt and your income versus your mortgage payment?
Yeah, so the debt to income ratio is basically the amount of money going out of the home versus the amount of money coming into the home, and that's how we qualify the debt to income ratio, your total amount of gross income versus the amount of debt going out. So with that debt to income ratio, there's different products that allow for that number to be a little bit higher than others, but it's great to get pre-qualified in order to figure out what you can qualify for.
So I'm paying about $3,500 a month rent right now. Could I get a mortgage for that?
You can get a mortgage for less than that, absolutely. Yeah.
And are there tax benefits for that?
Definitely tax benefits. You can, depending on your income level, you can write off your property taxes as an expense on your tax returns.
Wow.
Yeah, and your mortgage interest as well.
That's amazing.
Check out with your CPA if you could qualify, and just let us know if you'd like to get pre-qualified.
Are rates going to come down back to the 3%?
I don't think so. No, I think what we saw over the past couple of years was a gift to everyone who got a low interest rate. I'm thinking that possibly they might go down into the high 4s, maybe 5s at the very, very best. But if we could get those interest rates again, housing prices would go through the roof once again. So
Inflation,
yeah.
Yeah, so we've got inflation and interest rates, and they're kind of fighting against each other.
Yes.
So tell me, we've got a big presidential debate tonight.
Yeah.
And everybody's been kind of worried about what's going to happen, and not being political, but they think that whoever wins is going to make a difference in the housing market and the rate market. Is that really going to make a difference?
That's a great question. We really don't know what is going to happen with interest rates. With the current administration, they said that they were going to drop interest rates, as I just mentioned, but they haven't done so. If a new administration gets into, it's up to them with how they want to handle the economy. But we're hoping if we can get interest rates into the 6s, it makes home buying very affordable.
Well, but isn't the guy who runs the feds, he was in the previous administration as well, I believe. Mm-hmm. So he's kind of been steady Eddie along the way, right?
Yeah, it just depends on kind of where the market turns, though, and how they're going to navigate the inflation and maybe possibly going into recession, what they do with the interest rates.
Oh, interesting.
Yeah.
So we haven't seen prices dropping in houses.
No.
In fact, they've been going up.
Right.
So I guess that adds to the inflation rate that everybody's worried about, and that's why they don't want to bring rates down. But if rates come down a little bit and more houses come on the market, is that going to bring prices up? Or is it going to steady them out? Or is it going to maybe drop? Is it supply and demand?
It's supply and demand. So if interest rates go down and more people are willing to sell their homes because they can buy something else at a cheaper interest rate, then we might see more inventory. If we have more inventory because sellers are willing to sell, right, and get something else, then most likely when you have a surplus of inventory, prices come down. But if interest rates do come down and inventory does not move, then most likely because of low inventory, we're still going to see prices and home values go up.
So are there special programs that are out there that lenders offer that could maybe, adjust some of these things? Are there adjustable rates coming back in favor again?
The ARMs are not favorable right now. Mostly the 30-year fixed is priced the best. But I will tell you that we do offer a 5-year refinance at reduced cost. So if someone were to buy now and rates do drop, you can refi as many times as you like in 5 years at reduced cost.
At reduced cost?
Reduced cost,
okay.
Yeah.
So, in other words, if I buy at 6.5 right now and it goes to 6,
goes
and a
to
quarter.
6 1/4, 5.75. We offer the refinance program for our clients.
What's the rate that it makes sense to refinance at
Okay.
on the dropping rate?
That is a great question, because when we were in a low interest rate market, you had to have a higher drop, more of a drop. So if they were at 3, you'd have to have it drop at least 1%, in my opinion, for that to make sense to refinance. When you have a higher interest rate market, you're paying mostly interest. So depending on your loan amount, you could see a significant decrease in payment with a half of an interest rate, 0.5% of an interest rate drop. So if you got your house at 7 and they dropped to 6.5, and your loan amount is a substantial loan amount, you can see a significant savings in just a 0.5%.
Wow.
Yeah.
That's good to know, because I think a lot of people are not putting their houses on the market because they were locked in at that 3.5%.
Right.
And if they knew that they could get something closer to that,
Yeah.
without changing their payments dramatically, I think
Right.
there'd be a little more inventory coming on the market.
Well, and sellers also have to consider this. They have a lot of equity. So the more equity that you're achieving, the more equity that you're getting, the more money you have to put down on something else. So even though interest rates are a little bit higher, you still have more money to put down to keep your loan amount lower so that your payment is still affordable. So it's still actually a really great time for sellers to sell and use the equity that they have achieved over the past couple of years and buy something else. Whether they go out of state, whether they move closer to children, whether they want to move to the mountains or to the beach, now's a great time.
So I've heard recently, and I work a lot in the San Francisco Bay Area, that inventories are still at historically low levels and prices are still going up.
Yeah.
Is that because the prices are so high to begin with? Because I think the average price in the San Francisco Bay Area is somewhere in close to $1 million.
Yeah.
So are jumbo loans, are the rates the same for those kind of loans? Or?
Well, jumbo loans are priced a little bit different than a conventional loan. So jumbo has a higher risk factor in the investor market, so the interest rates tend to be a little bit higher. But again, I mean, you're still looking at a great opportunity to buy something now. If interest rates drop, values are just going to continue to go up. There will be more buyers out in the market.
Yeah, and we're hearing that the migration that we've heard about for the last 2 or 3 years, a lot of people moving out of Silicon Valley, out of the Bay Area because prices were so high.
Yeah.
And they moved to places like Missouri and Texas and Florida,
Right.
where they're encountering hurricanes and floods
Flooding,
and strange politics and
Yeah.
lots of different things. And so they're actually starting to come back.
Yeah.
So this year, for the first time, we've heard that in 2024 that people are actually starting to come back. And they're also having to be in the office. They can't telecommute anymore.
Right. Right.
So that should be good news for Bay Area prices.
Absolutely.
But if you're a buyer, you probably want to get in now.
You want to get in now. Yeah.